Hello everyone, this is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading systems, algorithms like you see here with our SPY systems. Been doing this since 2003 for individual traders and professional institutions. Okay, let's get started here. I already did one newsletter today. It's Super Bowl Sunday. I did a video on the general market. This one is going to be on commodities and precious metals. Let's get through this pretty quickly. Super Bowl's starting in about an hour. So this is our newsletter back-end feature. Let's go ahead and get this started. Again, this is the weekend newsletter, and I'm going to be covering specifically commodities. I already discussed a lot of this in the general market newsletter. You know, I discussed how you could really see the disparity this year. Look at the major indexes. The S&P down 7.3% this year. Triple Q's down almost 13%. Small caps down 9.5%. And look at these gains in commodities. DBC, that's the index, up about 11.3%. Crude oil up almost 24%. Soybeans is not on here. That's one I've been showing quite a bit. I think it's up 16% for the year. DBA agriculture up almost 7%. Corn up 9%. Coffee up 11%. Look at the energy stocks themselves. XLE, energy, up 27%. That's what the S&P gained in the entire year last year. So that is quite the gain. Oil services up almost 33%. Again, we're going to look at all the commodities here. And we're also specifically going to look at quite a few of the precious metals and individual gold stocks that stand out. All right. Last week on Friday, we had a big rally in precious metals and individual stocks. Now, we got to be careful there. We've seen a lot of false rallies where that sector looks like it's going to break out, goes up, and then completely gives it up. So it's possible that happens again. There was a news-induced event with the China, Ukraine and CPI data. So be aware of that, guys. If we see all of Friday's gains lost, then likely it was another false start. But if we get follow through, or if we just see a small pullback in the precious metals stocks, then that area may be set to go. There's weekly coil patterns, moving average ribbons on the weekly time frames are pinched, so energy is building there and set to be released. So we'll see if we can finally get a move there. The precious metals have been the one area that have not joined all these other commodities. So we'll see if they can join the group. I do think they will this year, but let's see if they can this time or not. And again, energy stocks remain very strong here, but like I said, it's not the place to buy energy stocks if you're not already in them. The bullish percent energy index is at 100%, meaning every stock in that index is on a point and figure buy signal, I mean. So if you're long, great, but if you're looking to buy swings, best to wait for the consolidation. I know it's difficult. So let's go ahead and get started here. Item number 2 shows the index sector table. Again, I already discussed the general market, so let's go ahead and move on down to the currencies here. You can see the dollar up about 0.7% for the week. And commodities here, you can see nice gains for the week. The only commodity down here was natural gas. Remember that sold off from the resistance area. We had that extreme cold. And so it spiked initially on that and has sold off. But big gains here on commodities. Big gains in the agriculture area. Gains continue in the energy. And the precious metals, of course, had a big gain, especially on Friday. Next, item number 3 shows you the economic news calendar for this week. So on Tuesday, we have the PPI, CPI, be aware of that. Plenty of other data here for the market and, of course, earnings. All right, let's go and jump to these charts. First chart here, item number 4 is the this ratio chart that I've shown before, and I showed it in the general market newsletter. It's the ratio of the CRB to the S&P 500. So commodities have underperformed the S&P 500 for years, while the S&P has outperformed. You can see the moving average ribbon, but you can see what's been happening. You can see how momentum has been changing. Ratio started flattening out here in 2020, and it's got this nice rounded bottom, and you can see it's trying to curl up here. Look at your moving average ribbon, which has been a fantastic guide. You know, all these pinches in the past have been good areas to go short the commodity or maybe long the S&P. But the moving average ribbon started to really compress here, and it's hard to see, but it flipped positive here, and now it's trying to expand. But there's a lot of room here, you know, for say if it wants to, you know, if it really wanted to get going here, it could. So, you know, if it wanted to do something like this, you know, we could be for, you know, a couple years of nicely higher commodity prices. You could also see perhaps the S&P. The S&P could also be down quite a bit, which could cause this ratio to go up. Remember that. So anyway, this looks bullish. Longer term, remember this is a monthly chart. Next. Chart number 5, here's the same chart. This is the agriculture area. That's DBA relative to the S&P. Same deal, underperforming. But you can see it's been basing here for 1.5 years, the ratio. It's breaking out of that ratio. Moving average ribbon was pinched here. It's just starting to curl up. Finally, chart number 6, here's the XLE energy relative to the S&P, which has underperformed for years. But this is the ratio chart I showed back in early January. It had this ascending triangle, super bullish, and look how nicely this is broken out of this ratio. You can see the moving average ribbons curling up here. Now, short term, you could add a little symmetry here. So it may be meeting a short-term symmetry, you know, and then get a consolidation soon. That's what I'm hoping, because this area has had a fantastic move. Like I said, XLE energy is up basically 28% for the year. That's the entire year. That's what the S&P gained last year. So maybe we'll do for some consolidation soon. But overall, you know, looks bullish. And we did a good job about pointing out the bullish area in energy in late December and early January. Next. Chart number 7, here's DBC. It's a weekly chart. That's the commodity ETF for the index. It's a basket of commodities. Again, you can see really started uptrending there in 2020. And December 2020's newsletter, I predicted a bullish year for commodities, and they outperformed relative to the general market in 2021. You can see this wave structure. Clearly some sort of impulse here. Maybe working on a wave 5 here in the short term. Next. Chart number 8, here's the daily chart. DBC just continues nicely up. From a wave perspective, looks like a little wave 1, 2, 3. So maybe you get a wave 4 consolidation, then a 5. Notice your moving average or your MACD here. It's coming together. Momentum's waning a bit. So it's pinching. It's either going to bounce off here or maybe cross. Like I said, maybe you get a wave 4 consolidation. If it pulls back here, then a 5. Little RSI divergence. This is the holdings for the DBC, weighted by percentage. Next. Chart number 9, crude oil. That, of course, has had a fantastic, last year and is up this year big as well. It's up like 23% this year. In 2021, late 2020, I said crude oil looked bullish. I said I would not be surprised to see it hit $100, and basically it's almost there now. Now here on this weekly chart, I can draw this expanding triangle. We're at the top of this range. This could be an area to consolidate, or we could just blow through it. We'll see. Your moving average ribbon here, again, you can see how this is a good guide, especially when they pinch. That's when your energy is built up, coiled spring. That's when you get your big moves, like here. That was a big move from here to here, right? When your moving average also gets expanded, you tend to get major bottoms or tops, kind of like here. It is getting a bit expanded here short term. Be aware of that, but it could also go a little higher first. But longer term, it's uptrending. Next. Chart number 10, here's the monthly view of crude oil. Again, you can see this downtrend line from, 2008. By the way, remember the general market topped out in 2007. Then we had the, bear market into early 2009. But during that time, commodities actually had a big rally into mid 2008. Kind of wondering if we're seeing something similar too. Crude oil took out this big weekly or multi-year downtrend line in early 2021. That's why I was bullish on crude oil last year. Worked all the way to my initial target up here. This could be an area to pause, consolidate, but over time, I think we'll see it into the 100s this year. Next. Chart number 11, here's the daily view. Again, kind of like the DBC we looked at. We did have a consolidation here in November, but from a wave perspective, kind of looks like a wave 1 to some sort of 3 at this point. Next. Chart number 12, here's natural gas. Natural gas had that big rally the previous week. Remember, it's been very cold in the U.S. That usually moves natural gas. Stalled on this little downtrend line. Had a big sell-off last week, down about 13.8%. This is an uptrend line to monitor here. Once again, a good example of your moving averages, guys. When they get too wide like this, tend to get major tops or bottoms, like here. Then when they pinch, like you see here, this squeeze, that's when you get these big phenomenal moves. So if you're looking for swing trades, look for these areas when you get these squeezes. Or if you look for major reversals in the trend, look for these really wide instances. So next. Chart number 13, here's the daily ETF UNG. It is at the 50-day moving average. On Thursday last week, I said maybe we get a bounce here off the 50-day. Notice your moving average is trying to pinch here. I thought it looked like a lower risk long there. So far, it's trying to bounce. Next, moving to the energy stocks, XLE. As I stated, those have been phenomenal. XLE Energy ETF up about 28% this year. You can see it broke this multi-year downtrend line back here the first week of January. That was the time to buy your swing. Next target would be this 2014 high. Maybe it gets up to there in the short term. That's only 4.5 points away. Then get a consolidation. Maybe we get to here, then get a consolidation, and then boom. Again, decent, nice pullbacks are long-term buying opportunities, guys. Next. Chart number 15, here's the daily view of XLE. Again, education, moving average ribbon. Look how squeezed it is here. When it's squeezed, that's your swing trade opportunities. And look at this move it had from here to here so far. All right. Here's another education. Symmetry. I identified this bullish symmetry break back here. That was your buy opportunity. And you had a second buy opportunity on this first consolidation. Now what you could look for is you want to watch symmetry on the pullback. This is your largest pullback in that uptrend right here. Short-term support is the 9 EMA here. Remember, the next target, if we just continue higher, could be that 75 area from 2014. Next. Chart number 16, here's the bullish percent energy index. It is at 100%. Remember, this is a percentage. It can only go from 0 to 100. It basically is the percentage of stocks in the XLE. I think there's 30 stocks, something like that, that are on point and figure buy signals. When it's at 100%, every single one of them is on a point and figure buy signal. View that as sort of a contrarian. You know, when everything's on a buy, you're near some sort of high, right? You know, down here, phenomenal buying opportunities. We may not see it get down to these really oversold readings for quite a long time, but any consolidations down in this area is possibly buy. But you can see it could stay up at this 100% sometimes for a week or two. But like I said, it's not a good swing trade up in this point, energy stocks, after the next consolidation. Next. Chart number 17, ERX. That's the double energy ETF. Same thing. Okay. Here I'm marking symmetry. So this is your symmetry to mark. If you have a pullback larger than that, you break symmetry, uptrend, relative to this low. This is a nice BPDR, having it right on the chart here. Next. Chart number 18, oil services, testing basically these June highs. Still looks quite bullish. Next. Chart number 19, what I find phenomenal is on the weekly chart. Look at oil services. It was basically 1,000 back here in 2014. It's now 250. So, you know, if it were to go back to here, that's a 5-fold increase. It's not going to happen anytime soon, but, you know, these could have a long way to run if they wanted to. You can see the weekly pattern here. Next. Chart number 20, copper. Now, this one didn't do much for the week. It was up off the highs. It's still in this big weekly coil that we've been monitoring. Basically, a 1.5-year coil. Next. Chart number 21, DBA, agriculture. We discussed the ratio above. Example, the energy or the moving average ribbon when they're pinched. Energy is building. That was a nice move. Uptrending nicely here. Healthy MACD. Next. Chart number 22, DBA on the monthly chart. So back in 2020, I identified this multi-year break. I said they looked bullish, and it's been a heck of a move up since then. Next. Chart number 23, here's the weekly view. We broke through this little resistance. It's now support. Next target could be up around 2250. Next. Chart number 24, soybeans. This could be the next target. Hell of a rally from this December time frame when I pointed out a buy opportunity. You could see your moving average ribbon pinch there. Next. Chart number 25, soybeans on the weekly. On the monthly. It's up 6.2% in February. Like I said, it's up about 15% this year. I identified a buy opportunity back here in 2020 when it launched off this multi-year base pattern and this trend line, multi-year trend line it broke. But then had a phenomenal run, and then you had your buying opportunity right here on the back test of previous resistance became support. This is where I talked about it back in the November, December timeframe being low risk. Hell of a move since then. Next. Chart number 26, soybean ETF, SOYB. So when that monthly consolidated back to support, it had this bullish diamond. Look at your moving average ribbon, guys. It was pinched, energy was building. So this was your low risk buy opportunity. Now, here's the issue. Ribbon getting too wide, isn't it? Doesn't mean it can't continue for a while, but it's a little too expanded. It's low risk here, not an area to buy. All right, this is where you want to buy it. Next. Chart number 27, corn. It's the monthly chart. You can see how it came out of this multi-year base, 2020. Finally, chart number 28, wheat. Same deal. It had a multi-year rounded base. I talked about this in 2020. Broke out in 2021. It's uptrending. You can see the moving average ribbon. It pinched here, and it's expanded. So you can see, guys, commodities have moved. Now, what hasn't done this is gold. Will gold join the other commodities this year? We will see. So let's go ahead and move on. Let's look at the U.S. dollar. Dollar had a big, dollar's been uptrending here since mid-2021. This was a major resistance, became support here, and it's been holding this uptrend line. So moving average ribbon is still bullishly stacked. Can it rally back to here? We'll see. Next. Chart number 30, here's another daily view of the dollar, just a closer view. You can see the uptrend line here that it's held. That's what the monitor going forward. It's obviously uptrending with higher lows. This is your last higher low. Let's move to precious metals, guys. Chart number 31, gold on the weekly. So you have this big coil that's been forming. Again, it's not participated with other commodities. It's been consolidating for the last year. You had a coil, energy is building. Look at your moving average ribbon. Look how pinched and squeezed it is. That means energy is building. You also have a coil on the ratio. This is the GDX-GLD ratio. It's best when the stocks are outperforming the metal. So everything is pinched here for a big move. You can even see the coil on the RSI indicators. Everything is locked and loaded. It just needs to go. Now, I'm going to show, instead of gold, I'm going to show the ETF because GOLD on stock charts, it has it closing at 1840 on Friday, but it actually closed at 1860. Next. Chart 32, there's GLD, that's the same chart, or the same, the ETF on the same chart. You can see the same pattern. So gold actually closed at its highs on Friday, not like GOLD is shown. But again, everything's locked and loaded here for a potential follow through. We'll see if we get it or not. Next. Chart 33, there's that monthly view of gold. I've shown this for the last, year or so. The bullish view is you could have a big, perhaps cup and handle here with a handle formed, and you get a big launch in gold well into the 2000s later this year. Moving average ribbon isn't exactly pinching here, but remember back here it was really wide. Got too wide. So it is pinched enough that it could launch a rally if it wants to. You can see back there it was pinched. So we'll see if this can play out or not, guys. Is it ready or not? We'll see. Next. Chart 34, daily view of gold. Like I said, stock charts doesn't have the correct closing here. Gold actually closed at 1860 on Friday. For some reason, it has it closing here. So ratio is trying to curl up here. Next. Chart 35, GLD, the ETF. So this is the better way to draw it, this tight coil breakout on Friday. So again, my concern is that some of the Friday's rally could have been news induced. If Friday's rally is entirely given back this week, then that would be bad. But if we just get a little pullback, or if we get follow through, that would be a good sign. Oh, we'll see. Next. Chart 36, here's a ratio, gold to the S&P. Obviously been downtrending, but I could see a clear 5 waves, MACD divergence. Look at your moving average ribbon. It's pinched. It's trying to curl up here. So let's see here. You could see it maybe trying to do this. So if that happens, then maybe, we would see gold rally. Next. Chart 37, silver. Like I said, this is the monthly chart. Silver has been just choppy mess. It's been in about an 8-point range for the last year and a half. This is your big support. Next. Chart 38, here's the daily view of silver. You got a double bottom back here. It's coiling. Got a higher low here. If you're long, that's a stop area for a swing. Next. Chart 39, GDX gold stocks up 6.7% for the week. Again, you can see they've been downtrending since mid-2020. Coiling now. Here's your ratio. It's trying to break. Again, we want to see follow through. We don't want to see this candle given up. This area has potential to follow through, but we need to see it follow through and not give all these gains back from the week. Next. Chart 40, GDX on the daily. You can see the coil here. Ratio. We'll see if we can bust through this area or not. Resistance. Next. Chart 41, 2-hour view. You can see we tested that resistance on Friday, pulled off of it. Next. Chart 42. Here's the 60-minute view. Little spinning top doji the last hour of the day. Next. Chart 43, GDXJ. That's the juniors. I like to monitor this as well. Got a little double bottom there. Next. Chart 44, GDXJ on the daily. So big support here. It's not as strong as GDX, but downtrend line here. We need to take this out. You don't want to give these gains back. So we'll see, guys. The onus is on the bulls here, the gold bugs, to get this stuff to follow through. Now let's look at some individual names that stand out to me. So GOLD, not the metal, Barrick Gold. We've been showing this big breakout from the coil on Friday. Looks good. Now we don't want to see price give this back. Next. Chart 46, GOLD on the weekly. I've been showing this bullish wedge. The ratio has been curling up here. Here added a potential symmetry target. So if this were to follow through, it measures initially up to 24. Next, chart 47, AUY, another one in a coil that looks decent. Next, chart 48, there's the weekly view, same kind of wedge like GOLD had. Same wedge ratio, trend line break. Next, chart 49, Newmont, what a reversal. Big ugly day on Thursday, big rally on Friday, breaking a coil. Got a downtrend line here to monitor. Got a coil on the ratio. This one's been uptrending since December. You have a series of higher lows here. Again, we need to get follow through. Next, chart 50, SVM. It's a little silver stock. Low priced one. It's got a beautiful falling wedge, MACD divergence, trend line on the ratio. One to monitor. Obviously, it hasn't broken out. Next, chart 51, sand. Another one I like. Nice coil. We'll see if we can bust out of this. Nice volume pattern. Next, chart 52, SBSW. One that's been on the list. Big breakout on Friday. Look at your ratio. You can see it bounced off the 200-day moving average here. Next, chart 53. Here's the weekly. Now, I've liked this one for a while because of symmetry. Back here, you had a symmetry break. This is the largest bounce in the downtrend from here. When you have a symmetry break, that tells you with high odds that that downtrend is over. So far, we've been moving up. Next, chart 54, Goro. Here's a low-priced one, guys. Little double bottom potential if you want a cheapie. Next, chart 55, TRQ. This one has been one of the strongest. Been uptrending since November here. Next, chart 56, USAS. Another cheapie. Bull flag on the daily here. It's below $1. Next, chart 57, and the last chart, here's the weekly. Coming off a double bottom. So there you go, guys. That's a mixture of various price individual names in the precious metals. Again, I certainly would not try to play all those if the sector continues, if it follows through. Just pick a couple. You could trade the ETFs like GDX, GDXJ. But again, I gave you some options there. And we'll see if this gold area can confirm this week or not. Remember, it's been the one commodity that is not went anywhere. All the other commodities have been in breakout mode. So will precious metals join the other commodities? We will see. Anyway, that does it. Enjoy the rest of your Sunday. Enjoy your Super Bowl. Take care.